So like here's the trade. It actually went into profit here, and so it was thousands of dollars in the negative, and now it's in the profit. So that's what that looks like. So if I closed out this trade right now, I would be down $825 instead of the 3,000 and something dollars I was down at when it was down here. So the account was almost bust at one point. But if it goes up to here, it will erase this loss and this gain from this trade right here that's in the green. Once that hits there, it'll erase the loss from this trade, because this trade is more lots than that trade. So that's the excitement right now. So I'm pretty sure if this goes up to here, that will erase the lot from that trade for the reasons I just stated, because this one is 1.0 lot, and this one up here that's losing is 0.5 lots, and then there's also a trade right here which is 0.5 lots. So if the price goes to there, it'll close all three trades. So one trade will be no win or loss, and then this one will be a loss, but I don't know how much. But because this one down here is twice the size as that one up here, it should end in a profit overall. I mean, all three trades put together. So it's a total of 2.0 lots total on this trade. So I traded horribly because I've never traded Ethereum before or cryptocurrencies. So this is part of my trading experience. And then I also used what you call Fibonacci retracement tool, which is this on the chart. So how you do that is you pick a level that you want to analyze from the top to the bottom, and you never know what perfectly is the top or the bottom, but where you draw your 0% depends, and your 100% depends on what trend you're analyzing. So if you're analyzing a pattern that's going down, like this right here, how I went like this, that's going down, I draw the 100% level, which right here it says 100% there, and I draw the 0% here. These are magic numbers. Fibonacci is magic number that exists all throughout nature. So like this pattern, I think I did something wrong. Something doesn't make sense. This looks different now. This looks totally different. This doesn't look like the same. Oh, I see what I did. Because I drew from there to there. Okay. That I was looking at a bigger pattern. So I'm analyzing this little down move here, okay? Not that entire section. So if I just analyze this little down move right here, I draw the 100% right there up at the top. The 0% is here. And now notice how this traded in the range for the longest time, but it went down right here below it, in between the 23% and the 38.2. Those are magic numbers. So now it went up and it just tested the 50%. And I'm hoping that the price will go up to the 61.8 Fibonacci retracement. So this is a Fibonacci retracement tool. You can analyze any trend. So if I drew the 100%, if I drew this the opposite way, it would be the wrong way to draw it, because you would draw the 100% at the bottom if you were analyzing an uptrend. So if I was analyzing an uptrend, this is a little tiny uptrend, I would draw the 100% down at the bottom. So that would be this, but it's still developing. And one can even say that this is even developing. Okay? So it depends on what section of data you're looking at, but they are magic numbers. So the reason of doing this is to analyze support and resistance. So let's go back and do that. I want to turn off the auto scroll so I could scroll back. There. So if I go farther back, before I was just looking at this section, it changes the levels because we're analyzing more data. So something nice has happened. Okay, in this downtrend, this is an hourly chart. Each bar is 1 hour, each candlestick. I call them bars sometimes. So this pattern was going down, and it's clearly in a downtrend, and then it tried to go up here but was rejected by the 100 EMA. Or linear weighted, not EMA. EMA would mean the exponential moving average. So actually we're looking at LW moving average. LWMA. So looking at 100 period, that means 100 periods of data is this magenta colored line, represents the main trend. And then this is the 50 linear weighted moving average, and the fast moving average is this tan colored line, which is actually sandy brown. And I use a simple moving average for that, for the fast moving average, which is a 15 period. So the 15 period, you could see like back here, the pattern crossed above it and crossed above the 50, but then got rejected by the 100. In other words, the candles couldn't close above this, and as a result, the pattern stayed in a downtrend. But what you see here now is, for the first time in this whole downward move, the candles have closed above the 100 period moving average, which is a sign of strength. So you see what I'm talking about? So it's this magenta line right here. That's the 100. That's the 100 linear weighted moving average. That's the one I like to use. Some people use the exponential. That would be an exponential moving average. I don't like those because they don't give as sharp as a study, and a simple moving average just doesn't help at all. That's what a simple moving average looks like. They're too slow. So for a longer period, and this is a longer period, 100 period moving average, I use a linear weighted. But for a faster moving average like the 15, or even if that was like say a 10, I like a simple moving average, because the simple moving average, a 10 period is too fast. I use 15 usually for my fastest moving average, and that tells a better story. So that's how I read my moving averages. Now when a pattern starts to test the fast moving average, is tan moving average, then that means there's something going on usually. Okay, and then it doesn't always work out, but you could see usually once something happens with the fast moving average, then something else happens with the next moving average, because the trends test different levels, and that's just how trading works. It's psychology. So this one, the 50, got rejected back here, so it went back down to see if the downtrend was still prevalent. Okay, the psychology of the market. And then it wasn't, so it went back and tested, and then was able to overcome the 50 period moving average. And then, so since it was able to overcome this, it actually went up and tested the 100 moving average. Okay, and it got rejected. So then that took a lot of the psychology back. It brought the fear back into the market of this pattern. So this is Ethereum USD, a cryptocurrency on the hourly time frame, and it fell like a rock here because of that, because it got rejected. It consolidated, it couldn't gain strength, and then sellers controlled the market because of that. It's like a war. So like then it came all the way back down here. This bottom here was also support. I thought it would rebound there, So I bought there. So I bought up here too. I was just completely off on all my trades, but it's now in the green because it gained strength down here for whatever reason. So I draw I'm drawing like the Fibonacci tool on a longer section of data to look at it. And if you do it at this point, you can see how the 23.6 in this case was rejected. You see the tall tails. The tall tails on the candle are little probes that go up and check. The bodies of candles have more meaning, but when you see tall tails on a candle, are tall tails on the bottom of the candle, they're probing down. When you see them on the top, they're probing up. So here you see them probing right at the 23.6, and the sellers came back into the market because selling is prevalent. So that's how you read the charts. So then the pattern coiled back, and then it was able to gain more buyers at lower levels and find support, and now it was able to challenge the 23.6 Fibonacci area and challenge the 100 period linear weighted moving average for the first time after getting rejected all these times. There's a candle that has actually opened above the linear weighted moving average for the very first time in this entire move here. Interesting, yes? So I need to get just right here to get out of the trade because I didn't place my trades correctly, and then I'll get out with a profit. So I have one trade that's already in profit, that's $200 and something in profit. This one is out over $200 in losses, but this trade erases that trade. But my worst trade is way up here. But if the pattern goes up here, I will be overall in profit because my best trade down here is a larger size lot. Interesting, yes? Okay, so let's remove the not candles, but the moving averages, and just look at the Fibonacci levels. So if this can be considered a breakout of the 23.6 level, this should go to 38.2, okay? Or if you're looking at a smaller section, so we have the 100% Fibonacci, this would mean if we're analyzing this section of data, this 100% would mean a 100% retracement of this level, okay? A lot of times that doesn't happen. A lot of times what will happen is they will go up to like 50% and then go back down and make new lows, or they'll go to 618 and then go back down and make lows. But it's not always perfect, you know, but there's a chance of it going back here to 61.8 and even higher. So I just need it to go to here where that line is, and then I'm out with profit. So it's like a war. When you're a trader, you're controlling a military. So there's other people that do their trading fundamentally, but fundamental data is lies. Okay? It's all lies. Your fundamental data would work if the fundamental data was honest. So this is why I rely on technical analysis, because prices in psychology are undeniable. Okay? It's undeniable whether or not there's demand according to the price action for something. So if you learn technical analysis, then you can predict. It's like reading the stars in astrology, so to speak. You could figure out the patterns and figure out what's going to happen. And a lot of people think it's voodoo and it doesn't work, but it's quite obvious that there are patterns, and that these Fibonacci numbers are magic numbers. It's all psychological. People think according to patterns. Everything in nature is based off of a Fibonacci pattern. Even sexual activity, everything. You cannot tell me that looking at these charts that when someone's looking at a big long red candle like that, it doesn't represent some sort of fear. If you're trading this, and you're watching this and you're seeing this fall and you're hoping it goes back up, that if you see this doesn't like influence you to get out of the market when you see a big sell-off. And that's what happens. And these long tails, these represent indecision in the market. And it's kind of like exhaustion in a sense that when you see long tails like this, in this case it's going down, so the sellers are looking for buyers, and then the bodies of the candle have more meaning. That's more meaningful price data. That's not as much fear or greed indications. So when you see the body of the candles, there's more of a real selling going on, unless it's like at a time in the market where it's just like off hours and stuff. But usually these long tails, these are probes, okay? And if there are no sellers, I mean, if there's no selling, if there's not strong selling, that's why this pattern back here was able to correct even after the strong selling, because the market decided and stabilized and came to its senses after seeing that going way down here wasn't a justified price for this current trading instrument. So here's another crazy sell-off way back here, and you could see the same thing happen. It didn't justify the price, so it went back up into a more sensible trend. So sometimes there are panics, and they have to do with magic numbers and psychology. So my friends, I am a trading mathematician, and I know lots of tricks. So anyway, you draw this Fibonacci retracement tool. There's also fans. There's also different ways. I have my own indicators. They're actually programmed with Fibonacci numbers. Nikola Tesla, he designed all his inventions to be divisible by 3, because that's a magic number. So if his invention, his design, I'm not into that kind of stuff, but Nikola Tesla, if his designs weren't divisible by 3 or something like that, he would redo it until they were, because he believed that was part of perfection. He also did like weird other magical things, practices, like he wouldn't shake people's hand because I guess he thought that they would be stealing his energy or maybe giving him bad energy. Alright, that's a wrap. It's a trade update. My trade has rebounded to my surprise. I started with a $5,000 account. This is a demo account. It's a demo trade. I plan on going into a real account by next month, and I'm building a system here to trade with, and we'll see how that goes. And it's kind of crazy. Here we are on Sunday night trading. Cryptocurrencies trade 24/7. This is the second largest cryptocurrency, Ethereum. The pair, if you were to trade this, it's called the Ethereum versus the US dollar. So it's the symbol is ETH/USD, ETH/USD, Ethereum US dollar. So like you see here, there's a bid and a bid and ask price. The bid price is lower than the ask price. So if you sold you would be paying that bid price, and if you bought, you would be paying that buy price, and the price in between is called the spread. Now, if something is really liquid, it doesn't have much of a spread. If it's liquid, it means it's traded a lot. So like if I remove this Fibonacci tool, you can see I have bid and ask displayed on my chart between the yellow and the red line here. The solid yellow and the solid red line. The yellow is the bid, and the red is the asking price. So I need the yellow to go above this red dashed dot line, which is my pending take profit order on the chart. So this is all semi-automated because I place the trades in advance. It's not done by a robot, but I do program robots, and I have some really advanced robots, and I'm probably going to be building a robot for Ethereum. Ethereum is very well capitalized trading instruments. And I forgot what I was going to say. It was something very important, but cryptocurrencies do trade 24/7. Because Ethereum is the first symbol, how it's listed. Let's see. Let me bring up the buy terminal. I'm gonna press new order, but I'm not gonna place a new order. But you see how it says ETH USD? This is the price of Ethereum in US dollars. If this said USD ETH, it would be the price of the US dollar in Ethereum. I know it sounds weird, but if you take any type of trading instrument, if it's a pair, if it's not a stock is just a stock. Like Amazon is just Amazon. So you could trade just Amazon and it represents a stock. That's what confuses people. But when you trade currencies, the currency is an exchange rate between two instruments. So like if I go to Mexico and I want pesos, but I have US dollars, and I don't want to, I want to act like I'm a Mexican. I want to go deep into Mexico and learn Spanish and get good deals and talk in Mexican and deal in pesos and get the best deal. I want to go exchange my US dollars for pesos and to get the best deal. So I go and I am going to get the benchmark rate for, let's pull it up. Let's pull up the currency, the Mexican currency pair. It's called an exotic pair, okay? It's not a major pair. So this is the current rate. Let's do a daily chart so you can see what's happening. This is a daily rate. It's traded US dollar versus the Mexican peso. Now it just depends on your broker. It depends if your broker denominates the Mexican dollar in US dollars or in pesos. So the first symbol in a pair is the prevailing pair. That's what it's priced in. So the Mexican dollar in this case is priced in US dollars. I think I'm saying that right. Let me pull up another chart just to be sure. Maybe I'm saying that wrong. US dollar to Mexico. So yeah, that makes sense because look, if this chart goes up and the price goes up, it's saying the US dollar is going up. It's not saying the Mexican peso is going up, because if the Mexican peso goes, if the US dollar Mexican peso pair goes down, it's saying that the Mexican dollar is strengthening. But because this is a pair, you're trading the Mexican peso, but you're trading it in US dollars, if that makes sense. So So the price up here says $23 roughly. If that price is $23, that's saying you're it takes more Mexican pesos to make a dollar, basically. Even though it doesn't sound right, because if this goes down, it's saying that the Mexican peso is strengthening. Because of the way the pair is arranged. So if the symbol was changed around, then it would be the Mexican, it would be the United States dollar would be priced by Mexican pesos. And sometimes they do that. It just depends on the broker. Oh, wow. I went into profit. Woo! While I was making the video. For a brief second, I went into profit. My trade almost triggered. It almost triggered. Look at this. I'm about to get out of the trade. I was down over $3,500. Actually, $3,800 at the worst point. I placed a terrible trade, and I kind of did it on purpose to show how much you could lose trading on margin. And even though I'm using only $800 worth of margin, I was down almost $4,000 on the trade because losses are unlimited. Watch this. I think it's going to go. I think I'm going to win. I'm about to win on a horrible trade. It was an awful experience. It wasn't worth it. Look at that. So the bigger trade down here is worth over $600. It's actually profit, even though the other trades are losing. Look at that. Come on, do it. I just need a few more ticks. We could watch this live and I win. I could win here. I'm about to win. I almost feel like moving my stop loss off, profit point up to gain more money, but I'm just happy to get out of the trade, and there'll be other opportunities. This is not how I trade. It would not be until, there it is, boom, yeah, woo! I did it. Trader Neil, guys, that's my nickname. I am a really good trader. I can make almost any trade work, and I'm surprised the account did not go bust. But there you see it. I placed a horrible trade on purpose and wanted to show I could make a bad trade into a profitable trade. Yeah! I didn't think it would work because I never traded this, and I used way too much leverage. And I wouldn't trade like that again. I would have spread out my trade differently. Oh man, that was rough. Wow. Wow, I'm out. That took 3 days. 3 days of hell just for a couple $100 profit. And I almost lost $5,000. And the whole account almost went bust. There it is. All those, that was live action on a demo account. You could demo trade, practice trade the real market. That was just fucking insane. All right, I'm out. Wow. Yeah. Yes.